Alright guys, glad to have you on board again today as we have signs of weaknesses in the Bitcoin dominance, as we have all the prerequisite technicals for an alt season to start in the foreseeable future. Not necessarily calling the shots now, but just willing to set the stage for a truly well-prepared alt season to eventually kick off at any given time. You guys need to be prepared. The thing is that, well, by looking at the educational content I released in English, I kind of figured out that I was missing an important piece that I thought I had covered already, but turns out didn't. So this one is so essential that I'd rather like to do it now rather than doing it too late. So this is exactly one of the things that I've been using to guide my decision into picking whichever type of assets ahead of the next market move. Remember, the market is cyclical by nature due to the forces of speculation and the fact that there's always risk management to be performed. No one can just be a buyer for idle time. There's a cost of capital that makes these kinds of investment themselves oscillatory. But the thing is that also value, remember, just don't derive just out of speculation itself and just buyers and sellers. It comes from those who have longer term visions, and these can hardly be done by just random actors buying and selling random assets. There is a fundamental force in the market that is value. And by talking about fundamental forces, well, this is actually the basic structure of this model which we're going to be talking about today, which has been derived from the moment in which I was doing some refresher to my quantum mechanics understanding and stuff like that. And it just came up to the understanding of fundamental symmetries, that anytime you are facing something fundamental, there's always going to be some sort of conservation of something. And in that sense, well, there are theorems about that, like basically, to be precise, the Noether's theorem, which is talking about those laws and conservation laws, and the fact that all fundamental forces, in example, in the universe, like we ended up figuring out quantum mechanics because of just looking at the subatomic particles and trying to figure out how they behaved. And that's just by looking at those things that we simplified till we couldn't find any more simpler working and worthy solutions to explain how those particles behaved, that we ended up figuring out that we needed more understanding of those fundamental forces. And we define a fundamental force when we figure out a conservation law, and basically, therefore, asymmetry is definitely when we say we've gone to the nitty-gritty of a fundamental force. So I tend to apply those knowledge and say, well, actually, cryptocurrency seems to behave not so randomly. There is, of course, this random chaotic noise on top of it, which is basically each and every 4 years, for whatever reason, people tend to pay attention to Bitcoin, and then they tend to venture into altcoin, not nearly paying attention to fundamentals, just basically degenning, gambling into assets, trying to get rich quick, just to end up being worse off at the end than the beginning, or losing it all for most of them. That's something we know for sure. I mean, most of you guys that are listening, you probably had your first cycle doing those mistakes, and you're misappropriately thinking that it's just going to be a repeated cycle. Like, you've been falling into this crack and felt like 2021 guys fell into this crack again, and now, well, obviously the guys are going to come in 2024 or 2025, they're going to fall into the same cracks. And to me, well, that makes no sense. This is not a fundamental force. There's no repeatability into something that's just happened 2 times. So it doesn't make any sense, okay? Don't come by the large margin that this is going to happen this way because it happened 2 times beforehand, okay? It doesn't make any sense. There's no fundamental force being really at play there, but just speculation. And like we said, speculation is not a fundamental force of the market. Value is. So you should base your decision on value, acknowledging that certainly there's going to be a lot of noise around it. Speculation might be there, but this is not where you should focus your attention. If you want to make money in the market, look for value. This is where you can have a little bit of control. That doesn't mean it's solved at all, but this is where the fundamental force describe how market moves. Value is certainly one fundamental force that no one will argue against in the market. Still, so when it comes to crypto, how do you define value? By using somewhat these models of symmetries to try finding conservation laws, the fundamental forces of crypto. Well, there's one thing that caught my attention, and that's basically one thing that has been in the pipeline for quite some time. Actually, genius Vitalik Buterin just was the first one to formalize it as the blockchain trilemma. It's just say, not even how hard you try, you're never going to get to solve this problem of basically, if you see the blockchains through this trilemma, it's basically you've got three axes. You've got like the security, you've got the decentralization, and the scalability axis. And basically, there's no way you can score in all of those three. You're going to have to compromise, which means you're somewhat of a dot within this area, this space area, and there's no way you can be precisely in the center. That would be the equivalent of being pretty bad at everything. So that means if you want to be very good at scalability, you can hardly be good at decentralization and security. You're going to have somewhat of a surface area that just can't cover it all. You can be good at something, but you're going to have to trade off your other two or some of the other two. And just by understanding this, everyone agrees with that. I mean, everyone tried to think and to let you believe that these things were no fundamental forces. Like there was a way out of scalability issue, and Vitalik himself said we're going to figure it out someday. Just like I said, I think we'll figure it out, but not the way people sell it, not with one token, not with one blockchain, but with an ecosystem of blockchain. And that's the reason why I came out with this model that you might have been coming across with multiple times if you look at the channel. So fundamentally, I'll explain everything, okay? It's been built out of this fundamental research for symmetry in the crypto ecosystem based on this assumption that the closest thing we've come so far of a fundamental force, which is something that we observe repeatedly, cycle after cycle. There's still the same old problem. No matter how hard people try to come up with solutions to this, it's still not yet there. So this blockchain trilemma is my fundamental force. Though by doing this, I try to find, though in a triangular system, in a triad, this is a third degree symmetry, which is basically, if you want to divide it like that, that means what are the permutations that you can create out of a triangle? Well, in order to get the same triangle, okay, you need to have the same piece. So there are all kind of actual symmetries, which here is called reflection. It's just like if you were putting a mirror into one piece, you would reflect the missing piece and have this exact triangle with reflection. That's actual symmetries, okay? And you have rotational symmetries. Okay, and basically in a third degree symmetry, what you end up having in the end is 6 permutations. That means there are 6 ways you can get the same triangle with operations. With just one operation, you end up with having 6 times the same thing in the end. So that's fairly interesting to understand. That means, yeah, third degree symmetry have 6 permutations. And that led me to understand the fact that my system, to find an equilibrium and to balance those forces, is probably going to be a 6-actor kind of system. I'm going to require not 3 people, one that's being very good at decentralization, one that is perfect at scalability, and one that's perfect at security. It's probably going to be a 6 permutation system. The beauty of this thing is that I'm going to have to be able to replicate the same operational systems, 3 rotations and 3 reflections. So that was kind of my base thinking model. And just to say, well, in cryptocurrencies, we're going to have to think about gradients. In here, I've been using market share distributions to define my axes, and here and to say I'm going to have to find one that is the leader in its system. It can't be 100%. Remember, nothing is ever, you can't be the best at solving one problem. You're just going to have to be the leader against others. So it's just distribution of market share in this axis. And out of this, well, now you have all the prerequisites to understand how this thing has been built. So it's just distributing market share. No one leader takes it all, but just a distribution, an asymmetric distribution of market shares following Pareto type distribution power law. And basically, that's how it is. One clear leader, one challenger right below it, which is generally always trying to double down and take over the leader, but due to the different nature of its trade-offs, and we'll talk about it, can't happen. So that means the leader is the leader for one good reason. The challenger is also there as well to make different types of trade-offs in the same axis, and that's it. And then comes the other ones, like those who are trying to reverse course, but generally hardly find their way. I mean, there is a threefold in between this one and this one. That means this one has to outsize 3 times to just compete with the previous one. That means this one has to have its market share divided by 3 just to reverse these 2 actors. This is where Pareto type law has some sort of another kind of fundamental law that we've seen happening hell a lot, and specifically in market share distribution. So that's the way I've used this one as a model based. Okay, so now we have it all. Like Pareto type law distribution, because I mean generally market forces are not equal, they distribute unevenly, and most importantly competitive environment tend to go for Pareto type distributions as well. So these are all the models I use. Fundamental symmetry of a degree 3 symmetry, which has 6 permutations, those 6 actors, and I define them using Pareto type law distributions. And I need to find those symmetries. Remember, I need to find actual symmetry, which means anything I do when I distribute on my system needs to obey symmetries. That means whenever I distribute my points, my market shares, I need to obey with those symmetries. Okay? It's absolutely critical for me. That means, as you can see, if you follow guidelines in here, all you have on the left is the same on the right. There is a symmetry there, okay? It might take some time for you to figure that one out, but just, okay, do it, okay? Take some time to do it. Sorry, make it Y. Okay, all the lines are not necessarily perfectly symmetrical, but that's really the way to go. Okay, remember, the points are symmetrical. It's just the lines that I draw manually are not perfectly doing it, but as you can see, same thing you have in here on the left and on the right, okay? It's just take some time to figure it out. Now do it again here. Same thing. All right, so sorry, the lines are not necessarily perfectly crossed, but as you can see, this is exactly the same. There and there, there's symmetries as well. Okay, so take some time to verify. Okay, remember, don't trust, verify. And you can see the symmetry is visible in here as well. So, like we said, the reflection, the kind of actual symmetries are valid. That means whatever axis you take in here, 3 axes are all symmetric. And there's also the rotational symmetry that's been respected, okay? 120 degree symmetry. That means this guy, okay, look at this, for example. Okay, so this is its area distribution, okay? Now you take it, you rotate it 120 degree, and what you get is the rotational symmetry, all right? So as you can see, this, if you rotate it by 120 degree, you get this. If you take this, rotate it by 120 degree, what do you get? Same thing, okay? Take this big boy, you have this one, it's a 180 degree rotational symmetry, okay? And it works for anyone, okay? Now take this one, okay? Just take some time to figure it out, okay? Just follow the points. This one is the purple area, so this one goes there, as you can see. It's just like that, 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 and that. Okay, now take 120 degrees. Who is this guy? Hey, exactly that, okay? This one follows this same 120 degree rotational symmetry. Okay, so that's fairly crazy to say, but it works. To me, it was mind-boggling. It says, okay, I don't know what I'm doing. I'm just applying some kind of random physics properties of symmetries and applying it to this random stuff, which is probably a so-called fundamental force, because we've tried very hard to try fighting against it, and it just somewhat seems to resist at all time. And the beauty of this model is, well, it might just be absolutely stupid, and I might just be coming along with something very well thought out, and well, just the reality ended up being in totally different direction. But on the other hand, like I said, it's just a guide for decision. And the beauty of it is that, as you can see, it's been proven to be very relevant so far. And that's the reason why, until it's been proven wrong, I'm going to consist at saying, yeah, that's far better than just finger guessing, like which is whatever everyone else is doing. Okay? So I've been using something that is some very well physically explained mathematics that have played their game into science for a long time. I mean, symmetries are not something that's been invented yesterday. I mean, notice theorem is from the 1980s, so this is pretty for the 1900s. Sorry, so this is pretty old game. And frankly speaking, well, I think something beautiful in here. The fact that this thing, as you can see, make quite a lot of sense, looking at what's already been played out and eventually what's about to play. It's like, to me, just figuring out the missing atoms in the periodic table in advance and knowing that, well, the properties of what's to come is already defined. We just need for these things to play out to prove it or invalidate it. Okay, so here's what it is. Though, like I said, that means there is going to be a whole piece by combining three of the assets. So I think these three guys will have a whole lot of interest. Okay, they will quite significantly behave altogether, just like I think these other threes will work pretty well in tandem. All right, due to the reasons that they operate rotational symmetries between them to kind of spread out their areas. That means when you combine those three, okay, forget about the other three, you kind of occupy maximum space, okay, in this big area where there are 6 actors, but these 3 balance very well altogether. All right, so that's really one way to go. It's very simple to understand, okay, it's just mathematical stuff. It's just a representation of it. If your goal is to cover as much area of this circle using just 3, the 2 best options are this one, this combination, and this combination. Okay? And if you have 6 permutations, this is, if you combine all 6, this is how you maximize the area, the occupation area, by just combining the powers of this. The second thing that we've mentioned is that by abiding all those intermediate symmetries, you have to understand that therefore it forces this guy to be the exact opposite of this. Remember, there's kind of just like matter, antimatter kind of operation system in our physics of particles. So in here, that tells you that if we need to abide those symmetries, we're going to have 2 containers in the same axis fighting for different trade-offs, but being the exact opposite trade-off of the other in facing it. So that means whatever axis you take, like scalability or security, you're going to have 2 contenders fighting for 80% of the market shares altogether. That means there are some other less reliable actors who fight for the remaining 20% market shares, when these 2 guys basically control most of the market. Okay, so one axis is definitely controlled at almost 80% of the market shares by 2 actors due to the symmetrical respect, the respect of symmetries in our system. Okay, so that's pretty great. That means in one axis, 2 actors work somewhat in tandem to cover most of the surface area, but in order to do this effectively, they make significant different trade-offs. Okay, it's very great. That means one is going to try maximizing another type of axis, where the other is going to be pretty bad at doing it, and making different trade-offs to cover some more area in where the other is lacking of. So they're kind of compensating each other while still trying to maximize their axis representation. Let's just take one axis which has already been played out so you understand it well, and how this thing can make a lot of sense by things that have already been played out. So let's assume one thing so far, okay? So back in, I would say, early ages of cryptocurrency, there were Bitcoin all along, altogether. All the other combined were significantly too little to be considered existing against Bitcoin, was the clear leader out there. There was just fake copies of it, and that's all there is. Then 2018, or eventually I would say earlier than that, but 2018 was really the revelation of the Ethereum kind of arrival, which was basically finally something new, finally something innovative that was complementary to Bitcoin actually, but people back then didn't really see it that way. That was just like, yeah, the Ethereum maxis were saying Bitcoin is just the old daddy, we're gonna have to kill it, and the Bitcoin maxis were just like, the fuck is this thing? It's just going to collapse on its own weight, it's just way too speculative and stuff like that. Well, it turns out they're very complementary, and just look at it, okay? So just try to filter on your, or I'm just going to draw it so you'll see, okay? So let me just take a fancy color here, or I'll just go black. So basically, Bitcoin is here, okay, in terms of distribution. So remember that you count this as points in here, and that's basically meaning that Bitcoin is the leader market share in security, maximizing average transaction value. And that's exactly what I define as the true property of Bitcoin. Bitcoin is just resonating on its own blockchain and solely on its own blockchain. Bitcoin can hardly have any utility elsewhere. Most of the Bitcoins stand into the Bitcoin blockchain. They have no purpose outside of it. Bitcoin realizes very few transactions. As you can see, transactions per second for this axis is 0. I mean, Bitcoin is the stupidest kind of slowest asset. But that means also it can process very high value transaction. Little amount of transaction, high value per transaction. Okay, so this is where Bitcoin leads clearly. It's the second in line on the opposite axis of security, which is total value locked. This time is the opposite. That means you are resonating around, okay? You're shining outwards. You're having hell a lot of external value, which you are either securing or that's coming to you one way or the other. And by doing that, well, Ethereum clearly leads by a significant margin what Bitcoin could ever attempt to do. There are eventually going to be some Bitcoin layer 2s or stuff like that, but as you can see in terms of value locked, they'll never be able to compete with Ethereum because Ethereum will have more than half of the overall market share, where Bitcoin can hardly get above 30, okay? It's really 30 maximum. It's really below 30 here, okay? So considering it that way, that means if you zoom into those two elements, okay, they are in the same axis, maximizing security, but with different trade-offs, okay? And those different trade-offs are Ethereum is much better at processing transactions per second than Bitcoin ever will, okay? And in making different trade-offs. The maximum trade-off for Ethereum is going to be privacy. Ethereum just can't perform any privacy on its own. It will eventually on the layer 2s, which we'll see. So if you figure that one out, it kind of defines pretty well what Bitcoin and Ethereum are today, frankly speaking. I mean, you can definitely see it that way. Bitcoin has some more private properties than Ethereum doesn't. This is where the trade-offs are made. Well, on the other hand, the TPSs is where biggest of the trade-offs are. On the opposite, well, they're pretty much nearing one to another. The big trade-offs are made there. That means in terms of interoperability, we see the two axes are going to be interoperability and privacy. And as you can see, the way I define those things will make sense in the end. But basically, trust me on that one for now. So it's basically the trade-off on decentralization for Bitcoin and Ethereum facing one to another has been made on the private sector and execution for Ethereum, which is absolutely incapable of allowing privacy at the blockchain layer. When on the other hand, the transactions per second is where Ethereum can have some throughput, not crazy throughput, but still some. Well, on the other hand, Bitcoin never has and never will have. Okay? So that's really interesting to understand. This clearly defines our two folks. Now let's get in line to the next bull market. After 2018, you've seen these problems in scalability into the Ethereum landscape. This new guy in town was actually pretty damn great at providing TVL and security, but yeah, kind of can't scale. So we're going to need some other problems to solve it. The same problem we're facing, Ethereum maximizing security, had to either trade off decentralization or scalability, and it definitely traded scalability. So for that reason, basically, okay, what happened there is we had to figure out new scalability assets. Remember, we still have 6 persons in that system because we have 6 permutations. So same thing, scalability access has emerged 2 leaders. Now seems like we know who they are. TPS is maximizing transactions per second, kind of Solana sounding stuff. While on the other hand, daily active users maximization, maximizing user onboarding, user experience might be surrounding layer 2s. At least that's who would say today has emerged as clear leaders of their market share, respective market shares for scalability in the 2021 bull market. They still might want to solidify their positions in the coming forthcoming markets, but they already have significant signs of dominance, signaling that the potential parallel type low are already at play, which means, yeah, we still have competitors like we've seen the Aptos and the like Move Language competitors to Solana. Maybe they will throw away the table and change whole distribution, but I would tend to say so far, as it is right now, Solana is leading on TPS, while on the other hand, in terms of user onboarding, the layer 2s are clearly winning the game. So as of this, different trade-offs, same old symmetries, and so on, and needs to obey by the rotation. Remember that we need to define those two guys by a rotation of what we've defined in the actual security axis. The distribution of points needs to be rotationally symmetrical. Okay, so very interesting to figure out, and as you can see, we respect the symmetries and the characteristics kind of pretty well defined. So let's have a look at Solana, for example. So Solana maximizes TPS, and therefore can only be the second in line when it comes to daily active users. It's still on board quite a lot of users, but layer 2s will always do better. And that kind of translates pretty well in reality today. Well, okay, that's one thing. Then what are the trade-offs? Remember, the trade-offs is they're going to have to be asymmetry between the two. Okay, it's important to have a symmetry, and they obey multiple symmetries. So what this thing is this. Okay, it obeys to this, and the second one on this axis is this, obeying the symmetries on all axes. Okay, so by doing this, we see that the trade-offs here are they all try to maximize scalability, and to do this they have minimal trade-offs in here in terms of privacy and total value lock, where they operate significant difference, okay, which means one is 10%, but the other one is the least good at. That's basically the very worst. This is where they make the biggest trade-off. It's going to be in interoperability, okay, so that's where the trade-off is for layer 2s, while on the other hand, that would be that the biggest trade-off in here in terms of Solana is going to be for average transaction value. And well, that's pretty much exactly what we have. We have Solana, which is processing basically valueless transactions, but a hell lot of them, but they're really fraction of really actually valuable transactions. So they just frankly speaking, you're exchanging things that actually worth somewhat zero, close to zero. So quite a lot of throughput, but not a single average. If you accumulate all those transactions, they're pretty damn valueless. So that's really the way to go, and I would tend it's pretty well defined, because on the other hand, layer 2s have much more TVL. Like the layer 2s are just beginning to grow now, and they already have more TVL than Solana. So just one layer 2 has more TVL than Solana. It's just crazy shit. So you can clearly see that in here, there are far more value transactions being performed than it is in Solana. On the other hand, you see that the layer 2s have one big problem, interoperability, because they can only interoperate through the layer 1. They have different architectures, which doesn't make it easy, and operating through the layer 1, which has non-instant finality, just make it a pretty damn big hurdle. So we've seen a whole lot of problem with layer 2 scaling due to fragmentation, because actually the liquidity is fragmented between those layer 2s. There are some ones who actually don't even allow withdrawal for more than days, for more than 7 days, due to their optimistic execution environments. ZK are improving significantly on this front, but they are trading off a lot of decentralization as well. So this is, frankly speaking, once again, a set of trade-offs. But what we can say so far is that the descriptions that we've made, simply using symmetries, kind of pretty damn describe the ecosystem we have so far. It's just that, yeah, we're at this point in time where 2018 figured out the symmetry on the actual symmetry of security. 2021 has figured out the contenders who are respecting the actual symmetry and rotational symmetry on the scalability axis. One would easily argue that the cycle that is to come is going to be led by decentralization. The decentralization is probably going to be the leader game on the next bull market, according to this model. What this model also tells me is that I had to define dual properties who are naturally opposite to one another. That means, remember what we said, like particles and antiparticles, they're basically respecting symmetries in here. That means on one axis, you need to figure out two critical aspects to define it. I mean, scalability is basically onboarding users and going fast. But it's hard to extract as many transactions from many users. You either concentrate on the number of users that you bring in and you extract less transactions per users, and on the other hand, you're going to maximize the extraction of value per user at the expense of onboarding many users. And that's a very understandable trade-off. They're actually like, yeah, the opposite of one to another, still being complementary to the same end game, scalability of blockchains in general. For security, we've seen those who are maximizing maximum value internally, and those internally by maximizing single transaction value. And on the other hand, you've seen others who are actually storing someone else's value. That both are actually antinomic and opposing each other, still figuring out the end game, securing either inward or outward. On the decentralization axis, it's still speculative, but the best I could come up with is that there is an intrinsic opposite relationship between creating decentralized ecosystem because you need to interoperate them. Just like we've seen, when you decentralize something, you need to have the information circulate, otherwise you're fragmenting. So to decentralize without fragmenting, you need interoperability. So we know one thing, interoperability is going to be a pure narrative for the next cycle to come. And the beauty of it is that we have had a lot of already existing examples of it. Like if you looked at the recent activity, whether being Aave V4 or quite a lot of other things like zkSync, zkStack, and all of these things, they all heavily mention cross-chain transactions. Okay? So interoperability is by far one of the most hot topic that there is now in the coming cycle. And I guess if you look through the surface, through the noise, it's basically, yeah, people have been selling the gambling narratives of gaming, AI, all those shitty stuff that have been pumping like crazy in the coming month, in the past month. While if we look at the signal, not the noise, we see that the dominance has been keeping going up since then. There was no real value created, but just narratives and stuff like that. There were no new user onboarding, despite Bitcoin ETFs. There were no newcomers. There were no new use cases in the market created by new technology being developed. So, frankly speaking, I think this was just bullshit. The true value, according to this model, might be actually solving the interoperability problems. When we'll have a sustainably scalable and decentralized and secure solution for cross-chain transactions. Remember that it can't be perfect. It just needs to pass the minimum threshold of scalability and security to be at least deemed to be a blockchain, a public blockchain infrastructure. Okay? And it needs to be a clear leader in interoperability. So no shit Sherlock, I've always made it clear. I think this is the Cosmos ecosystem that's leading the pack in here because, well, if you look at the white paper back in 2016-17, these guys were ages before anyone else talking about these cross-chain transaction environments. And to solve this problem, they said one thing that's very smart, is to say if you want to have seamless interoperability, it needs to happen through light clients. And in order to get light clients and to have this plugged into existing blockchain, it needs to be consensus agnostic. And if you want to have light clients, which are consensus agnostic, the one thing you need to have is fast finality. That means the number one trade-off to have efficient interoperability in consensus agnostic environment like client type, not going into too many technical details here to not lose you guys, but basically the problem is finality. Because you can't use like finality gadgets or stuff like they're basically those probabilistic consensus which are aggregating signatures like Avalanche or Solana, by the way. They are huge problems because they don't actually have finality. They have weird finality in the sense that they can fork for quite a long period of time. They're still probabilistic forks, but in the end, probability needs to be zero. For a light client to be executed, basically, you need to be 100% sure, though it means to be unforkable. There needs to be fork-proof consensus because there is no light client interoperability unless you get that, to the point that forks are non-viable anymore. Okay? So it poses a lot of problems to certain types of consensus, which are going to be hardly interoperable. Okay? And that's really, really important to understand. On the other hand, well, this interoperability via light client, there's one ecosystem that's been pioneering it, and for one reason using it, those Cosmos BFT type consensus, which are basically the simplest form to solve the Byzantine general problem by using consensus which reach instant finality at the block production. That's basically what Tendermint does. So Tendermint and Cosmos blockchain are basically built as being the most natively interoperable blockchain infrastructure by default, and it is a totally trustless, decentralized interoperability system, because light client doesn't have to be validators. Remember, in Cosmos, we can have relatively short, small validator sets, somewhat like 20 or 40 or sometimes less than that, and therefore, interoperability is created by these consensus, but relayed by any operator. That can be any person out there. We're just going to be relaying the packets. So this is how you scale, because if you imagine millions or billions of cross-chain transactions, there's no way you can fit it all into a single bridge or whatever stuff that is. That means if you really want to have a scalable interoperability solution, I think the Cosmos ecosystem has it, and I think that's IBC. And IBC is much more efficient on instant finality chain, not finality gadgets or mathematical construct like avalanches or those. Okay, so the true native interoperability is Cosmos. And these guys have pioneered it for quite a lot of time. It's already in production for a couple of years, so we all know that. So I think interoperability, cross-chain transaction is one narrative. Now try to figure out what's the antithesis of it. What's the weak link of this interoperability, which light clients and stuff like that? That's the impossibility to perform privacy kind of transactions, like permission, half public environments of some sort, when they're shaded gray territories. Because actually, well, light client interoperability is basically, I can interoperate with you because I see you. I see your consensus, I see what's at play in this consensus, and therefore I trust you enough to interoperate your data when it's produced. And once I have the signatures of your validators, I see what they're putting at stake in their collateral at stake. So I think I can trust it enough. We can open a channel, and if you cheat, you're going to have to give me that collateral. If I can prove that you cheated, or if you don't respond, or if you stop the connection, I can get some of that reward. It's just that your collateral is going to be mine if you default. And if I have a proof of that default, I'm going to be able to get some of your consensus. So that's really how it goes. That's how interoperability happens in a trustless, scalable way. But, well, like we stated, it's going to pose some problems when you don't see blockchain B, because blockchain B don't want you to see what's happening in there. So we see some zero-knowledge cryptography stuff in here, which is far more complex to say. In interoperability, it introduces a hell of a lot of complexity. So I think privacy is the antithesis of interoperability, because interoperability is going to require transparency, while privacy just wants exactly the opposite. So I think the trade-off for interoperability is these private environments. And there are a whole lot of demands for this, because I think there's no way we can decentralize the blockchain technology by just operating public networks. So I think the big trade-off on this decentralization axis, which I expect to be the driving force of actual value creation and new use cases to be brought on board by this dual interoperability, privacy, private environment, non-public infrastructures. And I think we already know who that one is. The privacy system, as we've just emerged a couple of days ago with the actual Eigenlayers white paper. I'm not going to go into the details, but I frankly think privacy, permissioned environment, privacy might not be the right word, is actually the one I wanted. Those intersubjective slashings mechanism with the Eigen token, I think is going to be the one that's going to offer permission environment. So I think many people have said that actual Cosmos is going to be destroyed by Eigenlayer. I think that's just a proof that these two guys are going to work hand in hand, solving the same problem from two different angles. And that's exactly why I think most of my attention in this cycle is going to be around these kinds of, are you able to enforce consensus and slashing on non-public permission environment? And I think Eigenlayer is going to be the best at doing it. Are you able to enforce cross-chain transactions trustlessly, seamlessly, meaning instant slashing on misbehave? And I think no one is ever going to compete the Cosmos ecosystem for this. So that's really the way to go. I think these are the guys you want to look at when it comes to solving the puzzle for the next bull market. Not the bullshit narratives of VCs who are trying to dump their tokens to your faces with their narratives of gaming or whatever. These things might emerge as a byproduct, but the true value at play has always been figuring out the public infrastructure for blockchains so that we can build the private value on top of it. Which public chains are going to critically solve problems of the actual blockchain trilemma? Because the reason why this model is beautiful is that it also predicts that we're probably done until we find a fourth fundamental force, which is totally going to change the whole symmetry. So far, it seems to be 3. And once we figure out this cycle, and we have the interrupt leader and privacy leader, these words can be interchangeable, of course. But once we figured out the nitty-gritty details of the decentralization axis leader in the public sector, we'll be done. I think we'll have a solidified ecosystem. So this model also tells me one thing. I think this is the last bull market in terms of creativity. Once we'll have that one sorted out, public infrastructure will be mature. Private adoption will come. But the private adoption doesn't necessarily translate into high multiple because, like I stated earlier, the market share distributions, the leaders in each sector will dominate so big that the chances for a competitor to emerge and to reverse course and change the game is going to be nearly impossible. That's due to the Pareto type law. The efficiency here is just there are network effects you can hardly fight against. It doesn't make any sense to fight against the nature. And that's what this model says. Once we've figured out those 6 branches on these 3rd degree symmetry, those 6 permutations respecting both axial and rotational symmetries to define the properties, we'll have something that is well balanced. And this balance is going to be hard to change. It's like fighting against the fundamental forces of the universe. It happens that way because of those symmetries. And I think the blockchain industry, through this blockchain trilemma, has its own symmetries to abide by. So that's what this model has been all about. It might be a lot to digest today, so it might be worth to eventually have a second look at it, take it into greater details. If you want to have it, just of course either print screen your video in here or just go into the Discord, you'll find it. That being said, I'm going to leave you guys with that. It's a pretty long video, but I needed to cover that one properly. So you know everything, at least from my point of view. And of course, that's just a model. Just don't blindly follow it. But I try to explain all the details building it. And I think that's an elegant way to describe it all. I've used some kind of particle physics fundamental forces design to design this actual system here. Might be just absolute bunkers full of shit. But I think I'd rather like to follow an elegant model than just finger guessing anything. And what I've seen in YouTube so far is just people trying to either finger guess or blindly selling shit to people. Some of them are actually totally aware of it, and that's even more dangerous if you're aware that you're actually scamming people with worthless tokens, just trying to sell your bags or whatever. So frankly speaking, I'd like to add some value to the ecosystem instead of just criticizing those who do poorly. And that's exactly what I think I've done today. So thank you for listening. If you've got it right until the end, that means you probably liked it. So I would appreciate eventually sharing it. I'd like to extend my visibility on the English kind of community, which I have a lot for French guys, but far less for the kind of the English crowd. So helping me around that, and I'll be very thankful to you guys. Bye-bye.